welcome back to this channel, and in today's video I just quickly want to show you guys something on how I got this particular entry here. Then I'm going to take it to my MT5 to show you how I did it, but for now I want to use here to do a schematic diagram. So today I'll be talking on a strategy. It's still under ICT strategy, but it's a kind of process. It's called the counter trading process here. So in a counter trading process, from the word counter trading, it means you're actually trading against when you try to counter somebody or counter something, you're actually doing in the opposite direction or against the trend. So in trading terms, counter trading is actually trading against the trend or against the trend, which means, let's just say, using the schematic diagram, you have a higher time frame where you have a bearish market. Okay, let's just say in a bearish market, if the trend is bearish, when you're counter trading, you'll be counter trading the opposite direction, which is you're countering the trend, which you'll be trading bullish. Then in a bullish market, if you're counter trading in a bullish market, you will be selling because you're doing the opposite of the trend. You're actually countering the trend. So counter trading can be done in this bullish and bearish market here, but in a consolidating market you need a lot of experience, because the consolidating market is a market that happens in both ways. So it's not actually a trending market. Just say you have a consolidating market like this, you're doing something like this. So you need to be very careful, because you need to know when you have to buy and you need to know when you have to sell. Now it's not a trending market, it's a both side market. So imagine having this kind of market and you want to counter trade, so it will be a really hard one. That's why it's better to counter trade on the trending market, so that if you're doing the opposite, it will be to a particular stage. Now let's just make this example more physical or more real. Yeah, so let's just say we have a bearish market, more like this. This is how the candlestick always look like in the chart here. We have a bearish market going up, going down like this, going down like this, going down like this. Can you really identify the counter trading process here? This is the counter trading process. You see this process where the candlestick goes up here to a particular level. That is what is counter trading. That is the whole process of counter trading. Let me just explain. If you're in a bearish market that is coming down, if you're buying in this market from here, if you're buying from this level here to this level, you're actually buying against the overall trend. This is the overall trend. The overall trend is bearish. So if you're buying from here to here, you're actually counter trading. Yes, you're actually counter trading. So if you're selling from this market, you're selling with the trend. Then there are some people actually buying from here to a particular level. They are actually counter trading, but they are still going to make profit off it, although they are not trading in line with the bearish trend. It's the same thing for the bullish market. If you have a bullish market, just like this, let's just say you have a bullish market like this, break a structure upwards, go up, come down, go up, come down, go up. So if you're actually, you see this is a bullish market, so if you're actually selling this market here, if you're actually selling down, you'll be making more profits, or you'll be making profit, but the actual trend of this market is bullish because we are going up, we are creating higher price, we are creating a breakout structure to the upside. But there are some people that are still going to sell in this market and make more money too for themselves. It depends on the strategy you're using and how visible your setup is. So you can actually counter trade in the market and still make profit. I know they say the trend is your friend, but counter trading can also be a thing in the market, and it's something that happened, and is what I want to show you into this video, how I made these profits. Now because I'm counter trading and I'm buying also, that means this market is actually a bearish market. Now if you look at this market, I bought in this market, that means I'm counter trading. If you look at the 4-hour time frame, you identify the trend of your market from the higher time frame. So if you look at this market from the 4 hours, guys, you see that the overall trend of this market is bearish. You can see I drew it from here like I've been marking out. So you can see that the overall trend of the market is bearish, but I'm buying the market. So if you go back to your 1 hour, okay, I will actually not do this analysis here because it might not really be visible. I don't know if it will be visible here, but if you look at from the 1 hour, or let's just continue here. Imagine now, or remember that the overall trend is bearish, because we actually had a you saw it here on the 4 hour when I showed you that the overall trend is bearish. So let's just have in mind that the overall trend is bearish. So if I'm counter trading in this market, I'm actually doing the opposite of the trend, which is trading to a particular level, which is bullish market. So now another reason, so before you even counter trade, you must have your entry point and your exit point. That's one of the information I should share with you also. So if you still check on the 4 hour time frame, where could be our possible exit point if we are actually counter trading? Because you must have a point of interest at which you're expecting price to come to before you can start selling, or before you can start counter trading. Let's just say, let me take this out. This is where we have to be, and look at this guy here. This is a old high, and this is also another old high here. So let's just call this liquidity, where we have this where this is a old high, and since price did not run out of liquidity here from this old high, you know that this is a very good level at which the price or market can actually come to. Then we see that we have an unmitigated order block here. So now we know that we want to see a reaction, a sell reaction from this order block, and we know that price is going to take out this liquidity on the 4 hour time frame. And overall on the 4 hour time frame, guys, we are still very bearish. We are just counter trading to this level of liquidity. So we know that we have a liquidity zone which we want to take profit on, then we are just counter trading to that level. But we know that price is actually very bearish on the 4 hour. We've been selling down, so we just want to sell, we just want to counter trade to a particular level. Since we have identified our exit point, how do we get an entry? So this is our potential exit level here. How do we get an entry to this market now? Using all the ICT conferences and the information, you know that if you see that on the 4 hours, this is a very visible fair value gap here. Very visible fair value gap here. I already talked about fair value gaps here in my video here on my channel. You can go and check out for fair value gaps. So this is a very visible fair value gap, and we want to see price come into this level as to mitigate this fair value gap. This is where we're expecting price to come into, but price did not fulfill its purpose, thereby it swept this low. Yeah, this is a liquidity, old lows are liquidity. So price swept liquidity at this level here. Just want you to understand how I did this analysis. So as price took out the sell side liquidity, that's how you call it, for liquidity is liquidity. Price took out this liquidity here for me, and it did not really mitigate this fair value gap. I was still very okay because liquidity has been swept. Yeah, that's number one thing to know. Then the second thing was I was expecting price to come to at most 50%, which is this middle here, or the fair value gap, but for some reason price did not really come into the fair value gap. Then let's go as low as 15 minutes though, where I do take my entry from. So from 15 minutes, I want to show you guys here. From 15 minutes, you can see here, after price swept liquidity, what next did I have? I had a shift in market structure, indicating that we are about to trade to a 4 hour point of interest. Now, just like we have in the schematic diagram here, on a higher time frame of a bearish market, just like this is a bearish market. This is the buy I'm expecting to go to a 4 hour time frame point of interest. So when we get to this 4 hour time frame point of interest, like in this case now, my own is the liquidity and the order block. Yeah, we can also call it an inducement. So if I should get to this 4 hour time frame point of interest, I want to see price continue dropping in line of the trend. So I want to actually make advantage of this bullish momentum, or this bullish movement down to the point of interest, so as to continue going down. So that is what the counter trading is, trading against the trend. So let's go back to the video. And for one of my videos also, I also say that what will always give you a signal into a market is the shift in market structure. Once you have a shift in market structure at a particular point of interest, you know that price is about to change direction. So this is it here. I had the shift in market structure at this level. So after having this shift in market structure, I knew that price was bullish. So at this retracement, I entered the market and we created a break of structure. Price tried to fill up this 30-minute imbalance here. You can see this is a if I should show you in the 30 minutes, you see that this is 30-minute FVG. I've talked about FVG too many videos on FVG, so because it's actually something that is important. Imagine we had a 4 hour FVG, we don't know how to identify FVG. How do you want to take this particular setup? And now just imagine this was a potential second entry. After a shift in market structure, you expect a retracement to an imbalance or to an unmitigated area, which is this FVG or this other block here. But price did not really mitigate this FVG, just like you did not mitigate the higher time frame FVG. But still, I was still in the trade, and we created a breaker structure which actually boosts, is like a boost to me, because this is a breaker structure here. Then we created more breaker structures, and see what happened. Price actually retraced down to this other block and started pushing up again. So that's what really happened. So let me just show you this trade on my MT5. I actually took it on my MT5. So like I said, the potential take profit can be this 4-hour point of interest, which is this liquidity level, which you can actually call your inducement, where you have this double top, or price can just tend to play around this. There's another block here on the 4-hour. Or just check it out on the 2 hours. You have another block here, a bearish order block here, which is this. This is the bearish order block. So this can actually also be your POI. This bearish order block can be your POI, but I'm expecting price to sweep liquidity here. So I'm still in the trade and it's actually running in profit. So let me just take it to my MT5, then I'll show you everything too on the MT5 here. So in my MT5, you can see what happened. Everything I draw on my trading views is always the same thing on my MT5. I just use them for mostly comparison, yeah, because most times candlesticks always tend to differ within the broker. So you can see this is the 4-hour FVG. This is the double bottom here, which I had as a very strong liquidity level. And you can see how price swept it here. Price sweeping out liquidity, it couldn't get into the 4-hour FVG, so I just had to wait on my shift in market structure. If I should take it as low as 15 minutes or so, let's go as low as 15 minutes. You see that as low as 15 minutes, I had my shift in market structure. Yeah, I had my shift in market structure here, which I drew out. And not just the shift in market structure. Let me see if I can zoom in something. I made sure that price swept liquidity from this old low, although you might not really see it, but it's what I saw too before entering the market. So that's why I drew this other line. I made sure price swept liquidity a little bit. Then on the 30 minutes, I already entered the market from this level here. Price retraced a little bit, then continued going on, giving us breakout structures. And as I said, we'll be expecting our take profit level to be at this old high here, which I drew out. This old double top here, you can see it here. Okay, that's the double top here where I have my take profit. So my take profit is already in place and my trade is still running, so I'll just leave you guys. So that's just it. There's no need of waiting on this very setup. I just want to explain the whole act of counter trading. This is just the same thing that has been happening in all these places, just that I want to make or take advantage of this one. See, it's not just here it happened here, it happened here again. This was if you actually were in this market here, you would have known that this was counter trading from this level to this point of interest. So this is the point of interest I drew out on the 4-hour. And since we are in a bearish market overall, any buy move we are doing is actually counter trading. Yeah, if you also have this idea, you know that we were counter trading from this level to this point of interest here. This is a fair value gap, a 4-hour fair value gap here. Although price came in, so if you bought from here, you know that you're counter trading to a particular level, a point of interest, because after having a breaker structure to the downside here, after having this kind of a breaker structure with all the momentum, you know that yes, we are now bearish. So if you bought from this level, you are opt to leave the market at this fair value gap here, which is your point of interest to continue selling. So after then, we had another breaker structure again here. We had another breaker structure again here, which is this one. Then you still know that yes, you're bearish. So you're even supposed to be counter trading after a breaker structure. So yes, because after every breaker structure, price tends to retrace into that other range, so like 50% of thereabout. So we had a breaker structure here, and within this range, price actually retraced again to this imbalance here. Then it sold down, giving you another breaker structure on the 4-hour, and now this is it here. We are now counter trading. Although I did not do all this one, this was where I met price because this was my point of interest here, because I was going to continue counter trading. So we are now counter trading to this particular level of take profit, and that is where I will be ending the buys for now, because I don't know what's going to happen if price take out stability. Whether we might want to change trend overall, because we can actually change the bearish trend from this level overall, or we can still continue from this level in bearish market, in the bearish order. So anything can happen. So I just want to be out around this liquidity level. So that's just it on counter trading. You just know how to mark out your point of interest where you're interested in the market. Then you also know how to identify a signal giving you a change in the market direction on the lower time frame, like I always do on the 15-minute, 5-minute change. I'm talking about is the shift in market structure and the breaker structure. So this price is actually headed to take profit. So let's just wait. I'll just keep on waiting on the market, but that will be all on this video. Thank you for watching, and please do to subscribe to my channel if you're a new viewer, and if you're a returning viewer, always to like and ask questions if you have. Thank you for staying to the end. I hope you learned something, and in case you have any question, do to drop it in the comment section, as I'm also going to be answering your questions. Thank you for watching.